It gives me great pleasure to turn to our next speaker. So Isabelle Jenkins is the leader of industry for financial services at PwC, who are, of course, our platinum sponsor for today's event. Isabelle has a long track record in financial services and has contributed to some of the major pieces of thought leadership that the City UK has done, and indeed that a number of international comparator bodies have done as well. And she will be talking today about the fact that we stand at a defining moment for this industry. We have opportunities for change, but they are perhaps more than opportunities, they are necessities for change, and I very much look forward to hearing her thoughts. Please welcome Isabelle.
Thanks, Miles, and it's an absolute delight to be here this afternoon with you, and we are delighted as PwC to be the platinum sponsor for this conference. I was slightly worried, Miles, when you started saying Isabelle has a long, and I thought you were going to say Isabelle has a long speech she would like to deliver after lunch for all of you, but I promise I'm going to keep it to 15 minutes. What I'd like to do is actually start with 2 points that other speakers have made. So actually, Rachel Reeves of saying UK financial services can lead the way, and coming back to Carol from Britain Thinks about this is a pivotal moment for financial services. And yes, financial services have emerged from the COVID crisis and have been able to demonstrate that they have been able to support society and be true to their purpose. And I do get that point, Carol, that we need to make sure we emphasise about how that has been done in partnership, both with government and with society. Carol gave us some of the statistics about the perception from both the public and from the policymakers of financial services. And from PwC's own research, we can see that over 70% of financial services organisations in the UK think that their perception has improved post the COVID crisis, which is all, of course, great news. But it means that we are at this point, this pivotal point, when it's absolutely critical now that financial services builds upon that success to really deliver on the purpose of financial services for the UK. We believe that there are 4 key points that financial services and professional business services need to focus on to make sure that they achieve that vision. And not surprisingly, and I'm very glad and relieved, actually, you know, a lot of those 4 points we've covered today. So I'm going to take you through each of them, and I'm very glad that actually a lot of them have been picked up already. So the first is holding the nerve on strategic purpose as we go into what might be more of an economic downturn. The second is that technology is more than just an upgrade. The third is that change will not be delivered by the incumbents alone. And the fourth is about the need for financial services to deliver on the ESG commitments to make sure that they are just and fair. Each of these areas on their own would lead to significant change in financial services. In practice, they're interdependent and they need to be considered together and implemented together. I just want to start by reminding us of some of the forces of change in financial services at the moment. I think it's fair to say that as we went into the COVID crisis, financial services was an industry that was in significant need of transformation. We'd had periods of low interest rates that were really constraining margins. We have organisations that had ageing infrastructure and processes. Cost-income ratios were high, and we were seeing a lot of competition coming from the neos and the non-financial services competitors. Chris Hill from Hargreaves Lansdown talked in the panel this morning about the changes in behaviour that we have seen from customers and consumers. And as we went into the COVID crisis, we found that it drove many, even those that didn't really want to use digital channels, and actually they found that they liked them. We've heard from the banks that by the end of 2020, they were delivering tens of thousands of video banking sessions a week, compared to only hundreds back in the January of that year. By 2024, cash will be just 7% of in-store purchases, and we're seeing digital payments grow at 14% per year. Incumbent financial services organisations, I think it's fair, traditionally tend to be slow to make change, and their governance processes have not been the most agile. In the COVID crisis, financial services organisations found that they could deliver change quickly and do it in a way where the governance ensured that that was done in a risk-appropriate way. We saw financial services respond to the need to support government and deliver bibbles and sibbles and do that in just 6 weeks. And I think that has really invigorated the industry and reminded of them of how to be agile. PwC has been doing some research into consumer markets, and actually that research is really important for us in financial services as well. I was at a talk yesterday where we were talking about that if you went back to the 1960s and 70s and you knew where somebody lived, where they went to school, what their job was, you could probably pretty accurately judge how they would vote and which party they would vote for. That is no longer true. And the same is true for the way that segmentation of customers in financial services need to be done. The traditional segmentation model of using social economic demographics no longer accurately depicts consumer choice behaviours. And actually what we found is it's far more important to segment on the way that the customer wants to interact with the financial services organisation. In fact, a piece of research that we've just finished shows that in financial services for consumers, 80% of customers say that the customer journey or the experience is as important to them as the actual end products and services that they're buying. We also see in asset and wealth management, in our annual chief exec survey, that the chief executives there are very worried about changing customer behaviours. And this takes on increasing importance as wealth shifts from baby boomers through to the millennial generation. And that generation will expect to interact in a more active, personalised and digitally enabled way than past generations. I've talked a lot about the retail side and wealth side, but this is absolutely true as well in terms of what we're seeing both in SME banking and right up to the top end of corporate banking. Customers are expecting financial services to provide them with a much better ease of use and enable them to communicate and transact digitally. So if those are the things that are causing the change, what are the changes that need to happen? So first, holding the nerve on strategic purpose. Prior to COVID, we saw a move in financial services to far more purpose-driven strategies, and the crisis gave financial services an opportunity to show that they really could deliver on that. But will they have the nerve to follow purpose as we potentially move into a credit downturn? I mean, obviously, the UK and European governments, central banks and regulators deployed a series of exceptional measures designed to help banks maintain credit to companies and to keep the financial markets open during the COVID crisis. This unprecedented policy response has allowed companies to survive temporarily and banks to maintain the flow of credit to the economy. But these actions have also hidden the true state of bank balance sheets, and regulators are now warning of expected deterioration in credit quality. As the emergency measures are phased out, it's going to be really important how financial services acts and supports those customers to continue to demonstrate that they can deliver on their purpose. According to our insurance sector survey, Insurance Banana Skins, not surprisingly, interest rate risk and its impact on the business is featured as a much higher concern this year than in previous years. Future volatility will impact the industry unevenly, as it always does. But what's really important at the moment is the fact that that volatility, I can say it, is coming from so many different areas at once. It's coming from geopolitical, climate change, market volatility, and corporate responsibility to deliver on social purpose. The second area that I want to turn to is around technology, and that technology is more than just an upgrade. Technology has dramatically changed the financial services landscape in the past decade, and we've obviously seen new and nimble competitors emerging that have efficient cloud-based platforms. The point that I want to make, though, is that successful digital banks are not just about well-designed products and services, but it's about how the customer insight drives constant innovation across the organisation. It's about their speed and agility and a different mindset to releasing product. And that is what is absolutely critical for the incumbents in financial services to learn from and from adopt. So yes, of course, they need to digitise their existing platforms and modernise IT systems. Many of those legacy platforms have been built piecemeal over many years. But it's important that organisations also use artificial intelligence, they look at data analytics, and they address those agile crowd capabilities to really target investment opportunities, develop those bespoke offerings, and better understand their risk profiles. PwC research shows that by applying agile methodologies, it can increase efficiency by 20% and productivity by up to 30%. To make this work, it's absolutely critical that upskilling the workforce and talent development is a strategic imperative. We were chatting about this over lunch, actually, and Lee from City had a lovely phrase where he said, it's not about talent, it's about the skills. We've got lots of talented people, we've got to make sure that they've got the right skills. Analysis from PwC and Bayes shows that the impact of automation on financial services and professional business services is potentially larger than any other industry. We will see some roles disappear, we will see new roles be created, but what's important is that every single role in financial services is likely to be impacted. In the next few weeks, PwC and the Financial Services Skills Commission are releasing our business report on reskilling for financial services. And Mark talked earlier about the role of the FSSC in the industry. Despite an awareness of this challenge, research shows us that businesses are not launching reskilling programs at the scale that is required. Only 14% of financial services chief execs have made significant progress in establishing a reskilling program at this time. As Miles has talked about and Sir Adrian talked about, everybody in this room knows that 2/3 of the financial services and professional business skill jobs are outside the M25. And if navigated effectively, the sector's response to this skills need could have an unprecedented opportunity to help grow the sector and create more high-quality jobs and support levelling up across the regions and nations. The third area I wanted to cover was that change will not be driven by incumbents alone. The traditional model of one organisation owning the front-to-back customer journey and experience is becoming less valid. Collaboration through partnerships is fundamental for the industry. There's no doubt that disruptors are having a major impact on the industry, and Stuart from FinTech West spoke about that this morning. But I think the important thing is that they are doing it more often by cooperation with incumbents rather than by trying to displace them. And that is the message that I think the financial services industry needs to hear and work on. We hear that 70% of fintechs say that they're frustrated with the processes and barriers of incumbent institutions when working with them. My last point was around delivering on sustainability, the ESG commitments to make sure that financial services are fair and just. Now, actually, my colleague, Elizabeth Stone, is hosting a panel straight after me where she's going to go into that in more detail. So I'm going to ask you now, actually, to answer a polling question for us. So can you all, everybody in the room, if you could get out your phones, and everybody online, look on the platform, and I'd like you to go to the polling question. And the question is, and I think this is going to be an absolutely fascinating one to see the results. Do you think that the various governmental and business commitments at COP26 were sufficient to underpin a green recovery? Now, Elizabeth is going to cover this in more detail. A few stats. Climate risk is the fastest growing risk in our PwC surveys. And in European markets that are leading the way on embedding ESG, our analysis indicates that ESG assets will make up approximately 50% of the total mutual fund assets by 2025. And we're hearing that more than 75% of European institutional investors surveyed this year said that they plan to stop buying non-ESG products in the next 2 years. I think that, combined with the comments made in the previous panel about the behaviours we see from retail investors, is really compelling. I want to end with just coming back to those 4 points. And we at PwC believe by focusing on these 4 key areas of holding the nerve on strategic investment, technology is more than an upgrade, change will not be delivered by incumbents alone, and the key to deliver on the ESG commitments to be fair and just, that this is a time of huge opportunity for financial services. And the industry has a real opportunity to redefine its role and purpose in the world. Whilst it obviously must take steps to protect customers, meet broader responsibilities and remain compliant, it also has to recognise that it has the power to drive meaningful change that will make a significant difference to its customers, stakeholders and wider society. Thank you very much.
Isabelle, thanks very much for that. I thought that was massively compelling and hugely thought-provoking, and I'm sure it's given everybody a huge amount of food for thought. A tumultuous picture, but also, I think, some really interesting potential areas to navigate in the years ahead.